Hello traders everywhere, Jeremy Lutz coming to you from the digital studios of Market Club. And for the second straight week, the S&P 500 rose Friday to close out a winning week. Even as investors weighed interest rate hikes, conflict in Ukraine, and rising oil prices. But do 2 positive weeks make a new trend to the upside, or is the market getting close to resistance levels? And as we usually do on a Friday, we'll take a look at an S&P 500 chart on a weekly level. And as you can see, closed at 4,543.06, up for second straight week in a row, up 1.79% on the week. Our chart analysis score remains plus 70, indicating that overall we are still in a sidelines position. In fact, the S&P 500 is the only one of the 3 indexes now trading above its. We'll take a look at the simple moving average above its 200-day. Moving average right now and above its 50-day. So we'll have to see if this upward momentum can continue, or if we're going to start getting up against some resistance levels here shortly. We'll have to keep an eye on it and see. We'll turn this off here real quick and go back to a weekly chart. And our key level to watch next week will be 4,157.87. A move below that level would issue a red weekly trade triangle, indicating back to a long-term downtrend for the S&P 500. Moving along, take a look at the dollar index. Rebounded back after a losing week last week, up about 0.5% this week, trading at 98.79 with a chart analysis score plus 85, indicating that overall we are still in a long-term uptrend for the U.S. dollar. Key level to watch would be 97.83. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the dollar. Dow Jones closed out its second straight week of gains, gaining about 0.3% on the week, closed trading at 34,861.24 with a chart analysis score of plus 70, so indicating we're still in a sidelines position for the Dow Jones. Key level to watch should be 32,578.73. A move below that level would issue a red weekly trade triangle, indicating a move back to a long-term downtrend for the Dow. Following suit, the Nasdaq was up 1.98% on the week, closed trading at 14,169.30 with a chart analysis score of plus 70, so we're still in a sidelines range for the Nasdaq. Key level to watch would be 12,555.35. A move below that level would issue a red weekly trade triangle, indicating a move back to a long-term downtrend for the Nasdaq. Moving along, we'll take a look at crude oil, bouncing back after having back-to-back weekly losses with a weekly gain of 8.69%, trading at 112.43 with a chart analysis score plus 100, indicating that we are in a long-term uptrend for crude oil. Key level to watch would be 108.68. A move below that level would issue a red daily trade triangle, indicating a move to a sidelines position in the short-term time frame for crude oil. Take a look at gold, bouncing back again, much like oil last week after a losing week, up 1.75%, trading at 1,955.40 with a chart analysis score plus 80, indicating that overall we are in a long-term uptrend for gold. Key level to watch would be 1,940.60. A move below that level would issue a red daily trade triangle, indicating a move back to a short-term sidelines position for gold. We'll bounce out of here real quick. Take a look at Bitcoin as we usually do, up 1.1% on the day and up 6.36% on the week, trading at 44,518.26 with a chart analysis score negative 55. So overall, we're still in that sidelines position, waiting to move out of it. Key level to watch is very close at 45,332.38. A move above that level would give us a green weekly trade triangle, indicating a move back to a sidelines position for Bitcoin. With that, every success, have a great weekend, and we'll be back next week with a market update.